Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, February 25th, 2022. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Here's a look at the ES and the daily time frame here. We've seen a significant rejection in the previous session, and we're seeing a nice check mark follow through today. So any pullback here after a major rejection is an opportunity for bulls to defend and extend this move to the upside. Again, in the previous session, we had a tremendous drop and held at these lows. Right at the RTH open, began a day-long rally back above the key range low. As we mentioned before, this key range low right here, prices in this lower area right here offer the best opportunity to trap and return back to the key range midpoint. That's 44.76. So right now, as long as price can continue to hold the lower edge of this range, 44.20, even on a pullback over the next day or two, it has a shot to rally back to 44.76. That is the midpoint of this range. Over time, we may actually see price continue to the top of the range here, which is about 47.60, 47.59s. And from there, you have the upside targets that could be in play as far out as 52.66. That's the 100% target, the 50% being 5,000. So that's why I mentioned earlier this month that if we do go down there and take out that low, that could provide a great buying opportunity, not only on a short-term swing basis, but perhaps on a longer-term year-end basis where this thing is continuing toward 5,000 and 52.66. Again, first things first here, you got to be able to hold that key range low, and that opens up a 1 to 5 day move that could take us back to 44.76s here. Overall, you still got to get through the 45.80, 45.85 zone. Otherwise, theoretically, we could see a lower high come into effect and still see another round of selling pressure next month. So you got to really be able to push through that upper market structure. All right, let's take a look here at the NQ. Right here, the NQ bounced off the 25% extension of the key range, that offering the best trap zone again for bulls. And now that a rejection has occurred off the 13.706s here, the expectation is for a continuation to the midpoint of the key range at 14.857s. So any pullback, even into 13.7 here over the next day or two, or a failed new low, that could still provide a bounce opportunity or a buy-in for a move back toward the 14.850s. Now that's just to the middle of the key range. Over time, we may see this thing rally back to 16K, which is the top of the key range. Again, in order for that to happen, you really have to start breaking through this upper market structure. And until then, any bounce could still be seen as an opportunity to lay on and push this thing to new lows again. So got to push through that upper market structure. But from a long-term perspective, one of the things we talked about at the February monthly outlook, you can go find the recording there at our website, but right here, rejection of this low would put us into the 13,000 to 13.3 zone. I mentioned that that could provide a 5,000 point buy opportunity to 18.3 by the end of the year. It may not even take that long. We could get there sooner, but again, this trap at this zone gives us a key range midpoint, the upper edge, and then the extensions that take us out as far as 18.3. That's the long-term target right now for this year at the moment based off of this impulsive move. And again, staying above 13.7 right now gives you a swing move back toward 14.850 on a 1 to 5 day basis. But you really got to push through that 15.2, 15.3 zone in order to start opening up some of this upper market structure. Okay, let's take a look now at crude oil. What a day in crude oil in the previous session. A major run, and it hit 154 cents. After that, a tremendous meltdown where price dropped $9 the other way. So it rallied $8 into that level, rejected, and then dropped $9 the other way to close the day lower. A tremendous rejection at that market structure edge. Now we're seeing a bit of a pullback today be defended. That would normally seem like an opportunity to fade it back down, but again, this market is such that it has been very bullish, and you don't really want to jump in front of this runaway price discovery here to the upside. So while we could see a little bit of a pullback here, remember this market continues to trade between 86 and 96 until proven otherwise. So we could see a drop as deep as at 86 here, and that could be an opportunity to bring it back to 96 as it continues to trade in this range. A failure to hold 86 opens up 76 as the next key level below. Let's take a look at Bitcoin here. Like the broader market, Bitcoin and Ether futures both had significant rejections in the previous session. Another buy signal down here you can see. So when price dropped below 34K the first time, it rallied back to 46K. Big move there. Dropped all the way back here and got to move back to 34,295, and prices below, really just below 35K have been rejected so far, and now we're making a move back up. Above 40K opens up the move back to the previous year's close at 46K, and again right now that's being offered. It wouldn't surprise if we drop back down again as we continue to trade in this range. So from a short-term perspective right now, above 40K opens up at least a move back to 42.5, and then you have a shot to get back to 46. And overall, while we still could see a move to the lower edge of this range down here, bulls have done a good job of protecting prices below 35K. 35 times 2 takes you back to the all-time highs at 69.70. So again, defending the 50% point there of this move. So right now, short-term strength here off of yesterday's rejection. Any continuation here needs to push through 40K in order to push into the 45 to 46,000 zone up above. Taking a look lastly at Ether futures here, this one is up 2.89%. Similar rejections each of these 2 days here, similar rejections there. A continuation up, now sitting right at 28 or just below the 2800 level. 4-day highs right there. Whenever price is able to push through that zone, it's going to smash through that area, rally to 3,000, make a move back up toward 32, 3,300. And at that point, again, like Bitcoin here, wouldn't surprise me if we drop back down and continue to chop in this range. It really needs to push through this upper market structure in order to open up the next zone above. That could happen sooner than later, but at the same time, we're kind of dealing with value here and price below value, and trying to find that lower edge of market structure, and it appears to be 2,300 at the moment. So looking for a push through 2,800 to open up 3,300 up above over the next 1 to 5 days. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, happy Friday. Please be sure to like, share, and subscribe. And for those of you in Masters, we will have our Masters live sessions week next week. All right, that's it for now. We'll see you soon. Take care.